Hello everyone, welcome to Crypto Basics Coach podcast. I'm Marco. I'm here to help people navigate this topic so as to benefit from the opportunity this new technology provides and not get distracted or put off from the nonsense there is out there about crypto. Anything and everything presented and discussed, whether here or in our sessions, is of an educational nature and should never be taken as financial advice. Always do your due diligence and consult professionals before making any final decisions. Episode 5, Ways of Making Money in Crypto. So yes, it's a great topic, lots of potential in the future. I've covered off various items, but let's get down to the nitty-gritty. How do you actually make money from this thing? So most people assume crypto is like shares, or at best commodities. The way they evaluate the value or assume how to make profit is based on things like company performance or rising prices or previous trends. If you hear this perception from people, it's actually a great indicator of their lack of understanding of this asset class. This asset class has nuances that other asset classes don't. Many believe it's one of the reasons that forecasting of the future value of these assets is greatly underrated. There are many different ways with these networks, with these cryptos, that you can make money, and I'm going to cover 10 of them. It's not an exhaustive list, but it'll give you a pretty good understanding of all the different type of things that these can do that other asset classes can't. So let's look at the first one. It's the most obvious. You buy something, you hold it, you wait for the value of it to go up, and you sell. And that's the most common approach that most people take to investing. It doesn't require a degree. You essentially buy something at a price and you sell it later at a higher price. People can do this with all sorts of things. Furniture, cars, houses, it doesn't matter. And crypto being no different, you buy the particular crypto, you hold on to it long enough, and then you sell it. What most people underestimate or don't understand, though, is that with crypto, there are other alternatives to just selling. And even when I discuss exit plans with people, and it's become far more common over the last few months that I've seen the industry, people in YouTube talking about it as well, is that 6 to 12 months ago, the only way to exit and sell profit, or sell money for profit, reduce your risk, was to sell. However, people are starting to find out now that these networks offer other alternatives that perhaps you don't need to sell as much as you originally thought, or you might actually not sell any, but you're still able to set up passive income and make a difference to your life. So that's number one, buy low, sell high. The second one, using financial instruments to leverage long and short positions, making money in both directions. Sounds fancy, but essentially what you're doing is you're buying certain tools that are available even in the stock market where you're able to make money when prices of assets go up, or you can actually make money on assets where their value goes down. Depending if you're using options or if you're using futures, has different terminology, but essentially you're buying a contract that gives you the ability to make money in either direction. And so in that instance, you're essentially taking a view of whether the market's going to go up or go down, and you can take advantage of it. Sometimes these tools are time sensitive and sometimes they're not. Any time though that you're using leverage, be very, very careful, because yes, you can multiply your gains, but of course you can also multiply your losses. So be careful if you're using those sort of instruments. Another way, number 3, unique to crypto, is airdrops. What are airdrops? Well, airdrops in the crypto industry are where a particular project may be, for example, launching, and one of the ways that they're looking to gain familiarity, gain market share, gain awareness across the ether is to actually offer a certain amount of their coin or their token to certain members. It could be members of a YouTube channel, it could be members of a particular chain or multiple chains. Cardano, for instance, just recently issued an airdrop for their Midnight token, and they did that on various networks, Solana, Bitcoin, XRP, for example. And so in this instance, you're essentially getting a gift. Each Each airdrop has different quantities. It could be a 10-to-1 ratio. It could be a 1-to-1 ratio. It doesn't matter. The point is that for doing nothing other than participating in crypto in certain projects, you're awarded a number of tokens from potential new projects. And naturally, what you can do with these, similar to an IPO, is you may have acquired these tokens and coins at a very, very good price. As soon as the market becomes aware of it, or as soon as they go onto an exchange and they go up in value, you potentially could sell some, you could sell all, you could hold if you believe in the project. At the end of the day, you're getting it for free, and you can then do with it as you wish. Sometimes these airdrops do have an escrow period where they're locked up and you're prevented from selling them for a certain period of time, because naturally a lot of people would probably just dump them on the market, and of course that has a negative effect to the project's value. In other instances, you're drip fed. You might get, let's say, 1,000 of them, but you might get them in 250 tranches over a period of 6 to 9 to 12 months. So they vary. So they're airdrops. Fourth, use your crypto as collateral to receiving a loan that you ideally would put towards something that then generates you income. So just like with precious metals, with cash, with property, you can put crypto up as collateral on certain platforms for certain cryptos, and you can essentially get a loan that you can then go and do something with. Some people use that loan to go off and do more DeFi. Some use it to potentially buy a business that generates income. Some use it to pay off their home. Use the loan for whatever you use a loan for. But just understand that with crypto, and this is becoming more and more prevalent, and more of the cryptos will be accepted by the institutions as collateral. The LVRs vary, but at the end of the day, you can borrow against your crypto and use that money to go off and do things without having to sell your underlying asset. Number 5, something that's unique to crypto is something called staking or delegating your crypto. And this is where on some crypto networks, you have the ability to offer your coins up to particular nodes that are used on the network. And for doing that, you essentially get paid a fee. Now, these nodes can be doing things like actual transactions. And so the fees that people would normally pay in order to do the transactions on that network, you get a percentage of those for staking your coin or your token on the node. In other instances, what you can do is you can delegate your crypto onto nodes that are used for governance purposes on the network. Either way, what you're able to do with your crypto, rather than, if you compare it to cash, rather than just leaving it in a bank account doing nothing, ideally making an interest rate, but you know what the situation is these days, is that these coins can be essentially put to work, and they can give you some sort of a fee while it's sitting there, while you're waiting for it to appreciate. You might want to hold on to it for a few years and then sell it. That's fine. But in the meantime, rather than it sitting there doing nothing and just looking really nice on some interface or on paper, you can put them to work. So staking and delegating is something that's unique to crypto that can give you a passive income while you're waiting to do whatever you're going to do with your crypto. Number 6, lending your crypto. Yep, just like the real world, you can take your funds in the real world and give them to, for instance, to a soliciting firm full of lawyers who they can then go and lend out that cash. I know people here who are lending that out somewhere between 11 to 15% per annum for mezzanine financing. The projects are well collateralized. There's very low risk of you losing your money, but instead of leaving it in the bank, you can actually put it out and get it working. And just like a bank, you can lend it out and earn interest. Well, in crypto, same can happen. There are certain platforms where you can put certain types of crypto. They all vary in the returns and the rules and the details around them, but you can essentially lend out your crypto. Now, usually these platforms that you lend your crypto on, of course, who would want to borrow it? You might be thinking, well, who would want to, receive my crypto and pay for the privilege? Well, we talked a little bit earlier where some people are using leverage. And of course, the leverage comes from people utilizing someone else's crypto. Now, of course, you need to make sure how the smart contracts are written up and what the risk factors are in, and there's margins, and if the person gets liquidated, ideally your full amount is protected, but you need to look into that because things can always happen. But essentially, you can lend your crypto out and you can be making a return. Now, you'll have noticed that I'm not mentioning returns in any of these items, and that's because at the end of this podcast, you'll find out that your homework is going to be to go and investigate that yourself, and you'll be pleasantly surprised at what some of these returns are. Number 7, one of the things you can do in crypto is you can provide liquidity. Now, for a lot of people, this isn't a familiar term because typically liquidity is provided by institutions. We're used to accessing those institutional platforms and just utilizing the liquidity. Liquidity simply means how many buyers and sellers are there. And the more buyers and sellers there are, the tighter the spreads, the more trading that can occur. But at the end of the day, you would normally pay fees when you go onto a platform and perform some trades. Well, in crypto, you're able to actually be the liquidity provider. You can pick to provide liquidity for certain trading pairs. And again, because those trading pairs are charging fees, you get a cut of the action. And so in crypto, you're able to go onto various platforms, pick the ones that obviously have a fair bit of liquidity on them, that are providing reasonable returns, and you can again put your crypto to work. And again, there are some risks. Nothing is riskless, but as you become more educated, more savvy, you'll understand how to mitigate those risks. The bottom line is that your money's working for you. I'm really hoping to get across the idea here, guys, that the days of leaving your cash in the bank are gone. They actually went a few years ago. You've got to understand this. They're gone. Because of inflation, your money is eroding even though the amount looks as though it's still the same. It isn't. You must get that money working for you. And crypto has such flexibility to enable you to do that. That doesn't mean to say you only use crypto, but you've got to get this mindset away from, I'll just save my way to retirement or save my way to financial freedom. It's just not going to happen. Number 8. Receive. You can actually now apply to various companies for a debit credit card. And what this debit credit card does is that it actually rewards you in particular cryptos. Some of them are specified, some of them you can choose. But at the end of the day, for doing the normal purchasing that you already do, so this isn't about getting one of these cards and going and spending more money than you normally do. This is potentially just a simple replacement. So whatever cards you use now, you can get a debit credit card that is set up with a crypto company like Crypto.com, for example, and you get a percentage back in crypto from all of your spending. So this is actually one of the ways that I first got involved, because I was like, well, there's no risk. I'm going to be spending the money anyway, buying everyday items, and if I'm accumulating crypto in the back end, well, bully for me, and I haven't had to use any extra money. So this is something that's a great step for a lot of people, first step, but look into it, because I know of people who are running their businesses through these sorts of credit cards, and hence their rewards are quite high, and they're accumulating crypto in the background. Number 9, holding stablecoins, which are essentially digital cash. I'm sure everyone listening went and did last week's or 2 weeks ago's homework, which was to go and look into stablecoins and what they are. For those that haven't, they're essentially a digital representation of the dollar, and that dollar can be any country's currency. So in this instance, on various platforms, you can just be sitting there holding cash, or in crypto's terms, a stable coin. So let's just say it's the US stable coin. And on these platforms, you can receive 4 to 5% for doing nothing other than simply holding it. So this is the equivalent of what banks used to do many, many, many years ago, where you'd have cash sitting in your bank account and you'd be earning interest. Those days are gone. However, in crypto, you can do something as low risk as this. The risk you're taking is, of course, which stable coin are you using, because the stable coins do need to be backed. So you need to be aware of which stable coin you're choosing and which one you're holding. But at the end of the day, it's very low maintenance. You're essentially just holding a cash balance and it's earning interest for you. Then there's number 10, which is, of course, for more advanced people, you can trade. And everyone has heard of trading, whether it's with bots, whether it's with systems, with tools. You can trade movements up, you can trade movements down, you can take a much shorter time frame perspective where you're typically trading maybe intraday, intra-week, intra-hour for some people. This, of course, involves a lot of education, a lot of time, a lot of discipline, and it's probably not one that's recommended for the masses. But I thought I would at least include it because, like any other asset class, if you have an opinion that it's going to go up or down in value, there is someone usually with an opposite opinion, and there are ways of making money by trading. So, in summary, there are many, many ways of making money using this asset class. The key and the main point that I want you to hear and take away from this is get started. Which of the ways that I've mentioned that you'll eventually use, you'll figure this out once you're moving. Just get started, especially with the right coach. And yes, I'm smiling. Last week, we talked about the homework being, well, who owns the central banks and who are the two organizations above them. Hopefully you looked into that. And I imagine that you would be surprised at finding out what the answers to those questions are. This week's homework, as I mentioned earlier in the podcast, is have a look at the 10 different ways that I've recommended you can make money using crypto. Have a look at the returns. You'll find that some of them are far higher than what is normally expected from investments. Usually those figures would carry lots and lots of risk. Again, everything has to be mitigated, everything has to be understood for you to then be able to mitigate the risk. But look into it, get an idea of what some of the returns are. They will surprise some of you, but it's well worth looking into. So hopefully I've given you a good sample of so how do you actually make money in this asset class. Have a great week, folks. Cheers. If you found this information helpful and are interested in a more hand-holding approach while navigating this complex industry, please visit cryptobasicscoach.com, that's basics with an S, and book a session. The first 30-minute session is free, and we can get to know each other, talk about what your aims are, what you're looking to do, and how I might be able to possibly help. I've helped people get started, set up exchange accounts, wallets, DeFi platforms, and general knowledge. Look forward to speaking with you. Cheers.